Hi folks, I'm Charles Brown at CB3 Financial Group. We're going to talk today about the midterm elections. They're now over, of course. What's going to happen in the markets? Well, the markets in general are accepting of divided government in Washington for the next 2 years. We have a new Attorney General which could affect the Mueller investigation and distract the Trump administration's goal of continued economic reform. The Fed leaves interest rates unchanged in November, but what happens at the December meeting? And the technicals are back to neutral after October's market correction. What's in your portfolio? If you don't know, you should. If you want to know, we can help. I'm Charles Brown. This is CB3 Financial Group's CB3 on 3 for Friday, November 9th. In political influences, Republicans are assured a Senate majority in the next Congress, flipping several blue seats to red, only losing one seat. Several races remain undecided as of this recording. They're too close to call, and that's the same in the House. But the House will flip to the Democrats. Now, what does that mean? Well, as I said, the House has been won by the Democrats, who seem certain to do everything they can do to weaken the Trump presidency. If the tables were reversed, probably the Republicans would do the same thing. Markets like split government, believe it or not, and I've never seen the U.S. more divided in my life. Such acrimony simply exists and it's not going to change. Here's my take. The reason markets like split government is because neither legislative branch can make any significant progress that could derail any particular industry. It's possible that the Trump tariffs could taper if there's not enough outcry from the House leadership. Probably not, though, as President Trump is not really influenced by much of anybody. Overall, I think the focus of market influences will now shift away from political influences and back to fundamental and technical influences. In fundamental influences, the Federal Reserve kept interest rates the same at their November meeting, which was largely expected, but now in front of us is the December meeting where the Fed is expected to raise interest rates again. And with the Consumer Price Index and the Producer Price Index both edging up beyond expectations, I believe there will be an additional interest rate increase this year in the December meeting. I don't think that's a problem because, again, rates overall are historically low. So I don't expect that particular fundamental data is going to have much of an effect for the rest of this year. In technical influences, you can see from the chart that it looks pretty good that a bottom has been put in, and we might actually be rotating between this particular range that I'm highlighting on the chart for you. So I'm not expecting to see new market highs by the end of the year, but I'm also thinking that the chances of the earlier lows, which I mentioned in our last update, the lows from February and then in April, I don't believe those are in jeopardy right now. And I think that the rest of the year probably will be range bound, especially as the uncertainty with what's going to happen in the new Congress, what's going to happen next year with the Fed. Those are going to be the foreboding influences on the market over the next few weeks. In general, though, I think we're in a good place. The market is still working through this correction, although I just said I think the low is in. So that's CB3 on 3 for Friday, November 9th. Do you know what's in your portfolio? If you don't, you should. If you want to know, we can help. I'm Charles Brown, and at CB3 Financial Group, we don't just manage your assets, we become one of them.